The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and glad to have you on the show today. And markets are going a bit crazy, so having a good old time here. We got the S&P is down 14 points on the day right now. Looking on over at the Nasdaq, it is down 33. The Russell's down 8, and the Dow is down almost 100 points right now. We got gold's up 21 points on the day, so moving big right there. We got silver is up 1.5%, and we got copper is pretty flat out of all the metals right there. We're going over to oil. It's currently down about 50 cents, and we got corn down $2.75. Pretty small move right there on corn. Soybeans down 15 bucks, over 1% down right now. Euro dollar moving on up 78 pips. Pound dollar up 83. Aussie dollar down 54. Euro yen up $1.78, up over 1%. Pound yen up 2%, still running. U.S. yen up 80 cents, nearly 1% after the massive boost they've had yesterday, and they just kept that streak going. Got U.S. Canadian, it's up 43 cents right now on the day, but that was after just a terror run where it actually ran up to 3 deviations before pulling on back. So that gets you caught up on the current market price levels right there, where they're doing what they're doing. And let's go ahead and check out some fundamentals. So on the fundamental side of things, last night really not anything major besides, of course, Bank of Japan Governor Kurata speaking and continuing to with that dollar and euro and pound all gain against the yen as they all continue to rise based on this aggressive monetary policy with the yen weakening against all of them. And they're going to pour all that money into ETFs. They're going to pull it into real estate. They're going to pour it into up to 40-year bonds, not just 5 and 10s, but up to 40. And so just reiterating that policy last night. And then going on in right now and looking at what happened today. We did have the foreign currency reserves on Swiss franc right there, so let's check that out. Usually not my favorite one, but let's go ahead and look over at it right now. We'll check it out, look at how that responded to the news at 3 a.m., very early in the morning. And so right over here we can see that we got a move, but it obviously was later in the day. It was on the U.S. news. Let's go ahead and move back to the 3 a.m. report. And right over here we can see we actually got a decent little pop. I mean, it wasn't major, but we got a decent little pop on it. But overall would have been a really hard thing to trade, and that's why it's usually not one of my favorites, because you do get some volatility. It usually takes it some time. And if you would have had longer term expirations, maybe looking over at 7 a.m. Or 11 a.m., something like that, then of course it would have worked out fantastic for you. But as far as the actual U.S. franc news itself, wasn't really a big mover. And so that's why I avoided that one today. Now, walking on over, what was the big mover of the day? We had the USD CAD just took off. And so let's look at that one right now and show you the trade we did on this one this morning. And basically got the two boxes drawn right here. We're talking about this on the Bull Bear Binary this morning. And Tommy O'Brien. And right here what happened was we had 6 announcements, high impact, and then another high impact announcement as well. All came out at the same time. And then there was another report at 10 o'clock that came out on the CAD. And so let's go ahead and check those out. What happened was we had the employment change come out, the trade balance, and the unemployment rate all came out as negative at the exact same time on the CAD. So USD CAD's flying up. We also had some positive dollar reports where the trade balance and the unemployment rate was better than expected. And if we look over on the non-farm employment change, that came in worse than expected. They thought there'd be 198,000. Only 88,000 came in on that report right there. So looking at those reports, anyways, the dollar overall, the dollar had 2 out of 3 were strong and gained strength. And the Canadian got the crap kicked out of it, flew on up. And instantly, within a matter of about 10-15 minutes, we were up at 2 deviations, and it actually continued to trail on up to 3 deviations right here. So just a massive, massive move. Really, probably a pretty good, decent shorting opportunity as well. And then it's right up here, right before the news at 3 deviations. I mean, they just brought it right up to as far as they're statistically going to take it normally on any given day. And then the IBPMI comes out for USD CAD. And it comes in better than expected. Well, that means the Canadian dollar is going to get stronger. So if you're buying USD CAD, you're saying the dollar is going to get stronger, the Canadian is going to get weaker. If you're selling the USD CAD, you're saying the dollar is going to get weaker, the CAD's going to get stronger. Or at least one of them's going to get stronger or weaker in relation to each other. So obviously that's good news for Canada. Their PMI came in better than expected, and it decided that it wasn't as fast as this announcement. Now this is the one that I was really banking on right here because we had so many, like I said, 6 high-impact news announcements, 3 on USD, 3 on CAD, and a medium impact. The average hourly earnings report basically came in a little below, but it's medium impact, and it wasn't that far off of expectations. And so we expected a lot of volatility one way or the other. But then that report comes out. Not only are you at 3 deviation levels, which is basically a pretty good sign to not buy any further, but look at possibly shorting, then you get a negative news report. And that report comes out, and it wasn't like it just flew down. I mean, it came down a few pips right there, but I mean, it gave you a great, you're off the 3 deviation, you got positive CAD fundamental news. That's a good reason to go short all by itself. I mean, those two things together, all by themselves, those two things with a good CAD report and being at a maximum expansion point, and it ridden all the way back down. Now it's down almost a 1 deviation. It's almost a 2 deviation retracement. So you could have taken advantage of this on the news, just straddling it, and then you could have taken advantage of the short after that positive CAD report came out and went short the dollar and long the CAD by shorting the USD CAD. So pretty sweet trade, worked out very well. And again, I like straddling on Nadex, which is basically where I buy a spread and I sell a spread because I don't care what direction it goes. I'm not trying to pick direction, and it's very simple. Simply go in and go, okay, well, where's the market at? Let me find a spread that's right about the same price in the floor. Buy that one. Let me find one that has basically the exact same ceiling. Sell that one. Take on about a $10 to $15 risk on each side of the trade if I can, and that's how it worked out this morning. So less than $30 risk on the trade. I want to make that $30 back. I want to make the risk on the other side. It flies up. And I'm able to take profit right here. I mean, literally just at 203. It's like right at that 2 deviation level. Take profit. And worked out really well. I mean, it's pretty much, just settled out right there. Just hung out. And basically settled right at 2 deviations on the spread. But actually, it kept going a little bit further. This one expired actually right as the other news report came out. So you could have made a little more. But my goal on the news trades normally is not to go for a whole lot more because binaries, I don't know which are the binaries that much, but it's so easy on a news report for it just to flip and go the other way. And, you have to have your exit plan. And 1-to-1 to me is a good exit plan. And, I mean, how hard would it be if this is where you want to get out at 1-to-1 and this thing's just moving right here and you're just waiting. And notice, I mean, that's just a great support level. I mean, it really respected that support. But you're just getting really nervous about it just flying back. And if it flies back, I mean, it could really fly back. Then you get back that 1-to-1 and, it's hard enough to make profits on trade without giving them back on top of it. So it finally does decide to bounce off that, but then it uses this next deviation as an excellent resistance level and drops on down back to the same support level, 2 deviations. Notice it spends about 10, 15 minutes right there. It drops on down to the next level, right here the deviation 1.5, and spends about 20 minutes at that price. And now it's just sort of doing its thing in between, hasn't quite decided where it's going to go and finish the day off yet. But basically, call the USD CAD done. It's over. Move on, you can trade it still if you want to, I guess. But, that was a nice up move, a nice down move. And if we flip on over to the 10-minute reports right here, we can see that if you were in still, then you'd be looking at putting a stop right there. Okay? And if you're going long, then, well, you would have got out, like I said, at 1-to-1 at the 2 deviation or, right up here at the 3. I mean, that'd be really pushing it. So trying to get 3 deviations is one of those things you just really don't try to do. If it happens, then, count your blessings. But anyway, so nice pullback, and you could grab another 1.5 deviations. You've locked in your profit, or, you're seeing if it'll go further, but at least you have a stop built in. And it's a pretty simple method I use. I take the deviation levels, plot them on the chart here, and then once they're plotted on the chart, then once the 10-minute bar, okay, so let's say I'm going long. Once the 10-minute bar closes above it, then I'm going to tighten my stop. Or it closes below it. So let's just look on the downside because this was new, so it moved a little faster than normal. And let's say you were short on this. You went short on that negative news report. You're off the 3 deviation level. How would you tighten your stops on the way down? So we go short, say like right around here, and news report comes out, and so you get in. So every bar that closes below, like this bar right here closed below the 10-minute, I tighten my stop. And that gives me a nice tight stop. Now if a bar closes above it, and I can see that right here, let me zoom, make this a little easier to read. Let's see, there we go. Yeah. All right, so this bar closes above the deviation level. Now when that happens, after it closed below, so we've tightened our stop right here, move that on down, okay? This bar then closes above the deviation level. Doesn't affect my stop. But if a subsequent bar closes below it, I can tighten it again on the same deviation level. So therefore further locking in more of my profits. Okay? And then right over here, if we get right in on it, this bar originally closed below it. So I could tighten my stop because this bar on the 10-minute bars closed below my deviation level. And then this bar closed above my deviation level, and then this bar closed below the deviation level. And so I simply tighten the stop yet again. And so, you know, right now, basically the whole idea is to give you a very objective method of price target that actually allows your profit to run while not giving too much of them back. And that's one of the hard things as traders, right? To manage your profits because, man, you're up, man. You don't want to give it all away. And, you know, at the same time, should you take it now? But then you take it, and that's that big move day, and you gave, you know, you could have made 10 times the amount of money and, you know, all that. I'm not talking about being greedy. I'm talking about, you know, being objective and letting the charts tell you what to do, trading based on the charts, not based on simply your P&L. And, you know, I mean, don't take on more risk than you can handle and trade based on the charts. Don't trade based on your balance. Otherwise, that's going to just flip you out, and you're going to take profits soon, and you're going to let lists run. And, I mean, it's all sorts of, you know, psychology issues you're going to have with that. But if you'll not over leverage your account, not do too much risk, probably the number one mistake I would say traders make is they put on more position than they can handle, and then the trade becomes about their money and not about what the market's saying. And if your trade's about your money, the market doesn't care about your money. It doesn't care if you make it. It doesn't care if you lose it. It doesn't care either way. Okay? It has nothing. Your P&L has nothing to do with what's going to happen with the market. So why does your P&L have something to do with your trade decision? Your risk should have something to do with how many you put on, but the market itself is actually what should determine what you do next. So you definitely want to keep that in mind. And we had a couple other ones. Like I said, we had gold, so let's go ahead and look over at gold. That happened at the same time, and with Bernanke and everything, and it finally did go ahead and pull up, and trade would have worked out just fine. But you know what? At a certain point, it's no longer about the fundamentals. The fundamental news shock, and I don't trade fundamentals like totally being directional on that unless I have a good reason, like we're at a deviation, it's pulling back, you know, the news is in my direction, it's taking its time, I have a good setup, a good risk reward. I mean, those would be reasons. But gold, I mean, it flew up and flew right back down, and gave us a chance to. I mean, you could have taken off a decent little profit or round break even on the trade. It's finally moved back up to that one deviation level, and. But I wouldn't expect us to a whole lot more out of gold today. So the gold market closes here in about 10 minutes. So, all right, we'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's check out what we have going on and how we can take advantage of that in the market right now. And looks like we get a little pickup there in the gold market. May start pulling on back pretty soon. But so right here, we're almost back up to this high. I mean, it's just trying to touch it. And right now, we're getting some decent expansion without volume here in these last few bars. So we'll find out sort of how that turns out for us and if it can do too much more. But I would not be surprised to see a pullback here any time now on the gold market. But anyways, had a nice, not only did the news trade, but you also had another, pullback with a nice long right there, bounce, and perfect, A pivot, entry, and take profit right there, profit popper. So literally hitting that level, which is just a couple ticks below the bar right there. Let's go ahead and the one other you could have traded, I avoided this one because really the premium was so high, couldn't really do a decent straddle. Or strangle, just because of all the movement that happened yesterday on the USD yen. And it turns out glad I didn't, because it really just rocked up. Now, if you would have had the expiration time, then yeah, you got the full deviation, would have worked out okay. But I mean, there was just a lot of premium built in. To me, it just wasn't worth the trade. And only got one deviation, which sounds funny, but after you get like 5 deviations, yesterday, one just sounds so small. And so yesterday, it literally just, it just kept going and going and going. So here's 3, here's 4, here's 4.5, here's 5, and it decided to keep moving on up. and moved on up basically that deviation level last night. We saw that right there, and we were basically trailing our stop. Stop never got hit, so all night long. So if you were still in the trade, then you could have been riding that even further. So right here's the bar that closes above it, and right there, and then it keeps going. We got another new deviation level, and so right here we followed up, which is the bar, that 10-minute bar right there, closes right above it. Now this bar right here would have knocked you out on the trade, but you got another entry on the pullback. So you take that entry, and then it goes in, closes above it. And so you're able to tighten your stop up here. Now you've tightened in, you've locked in a profit. And then you get another bar that closes above it again. Again, it's always about that close above. That's what we're looking for. So close above right there. And then over here, it pulls back, it closes below. Remember, I talked about that earlier. So when it closes below it, and then closes above it again, I can tighten it yet again. And moved on up right here. So now, basically, it comes back, it hits it, it's done. It starts dropping. Okay, so you have a reversal in play, which usually you're looking for one around a plus or minus 1 deviation level. So if you go in and you take that, maybe you take this as your entry right here, so you could short it, shorten on down. So you go, we'll say you short right here, so on the pullback. And then you go in, okay, well, I'm looking for, where I'm going to put my stop. I'm going to put my stop right up here. This bar closes above it, or below it. And then this bar closes below as well. And then sort of the same methodology. Bar closes right here below this level. On that one, let me move that over. And then we go a little bit further. What happens? This bar closes above the level. And then this bar closes below it. So I can tighten it even further yet again. So right there. And then that oscillation, that crazy move right there, boom, stopped out on the trade. And then do you get another entry? Yes, you get a pullback. You're at settlement. It's moving on down. You could keep taking it, whatever you want to do, however you want to trade it. And if you traded on that one and it moved down, moved up, moved down, you would have had probably, on this trade, probably, let's see here. It goes down, so your stop, we'll follow it. Let's see what happens. All right, so right here we go short, right after the pullback, and then it breaks back below. Now we're looking for the first chance we can to move our stop, because this is a bar that closes below, and then this bar closes above, and then this bar right here, because we got to wait for it to actually get below our entry price, moves below. So this bar closes below, and so we're able to move our stop right there, and then a bar closes above, but no subsequent bar closes below. So now we're out of the trade, and so you could have got just one more leg down on that trade if you wanted to, and then based on how you do your reversals. If you're, I guess you could press your luck and go short again after you caught this massive move up, this massive move down. I'd probably be looking for a reversal at this point. RSI divergences, everything else started to show up. But if you tried it again, you probably got stopped out pretty quick on the first round. So let's say if you went short here, and the tightest stop you're going to get is right above the high of the highest bar since your entry. So right there, it would have got stopped out on that trade. And so you go in, you're looking for your next short, and so we're out. Boom. Okay, now we're back in the trade again, right here. And then we're looking to, okay, so that's where our stop's going to be. And we just trailed on down and do the exact same process all over again. And so lock in another nice profit right there. Pulls on back. Not a huge profit, but nevertheless a profit of about 1-to-1. So quite a few good trades. All right, stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome right back here to the Diagnostic Trading Hour. And looking at what's going on right here in the market, scrolling on down and checking them out. So we got a USD yen going on. Let's go ahead and look at some of the other pairs. And USD yen is really just hovering right now, right up at that 1 deviation level. And basically you have a stop right here, right below this bar that's closed above it. And that would put a 97.13, put it at least 2 ticks below. The rule, if you want the actual rule, would be 1 tick plus the bid-ask spread. So would be actually where you'd actually set your stop loss or your trailing stop on the trade. In this case, it's a trailing stop. So because it's already moved up from the entry. And I'm targeting the high, and then if it does continue to move, how far will it go? Well, the 97.43 would actually be the next level if it continues to make that climb. And then looking on over here, we're going to check out, let's go through and let's look at our indices. What's happening on those? So we got the S&P and moving on down right there and just slamming right into 1.5 and deciding to stop. And so if you're short on the S&P, I mean, you had plenty of reasons to be short. But if you're short on the S&P right here, there is your stop level. It pulls on down, closes above, we're waiting on a close below. We get it right there. That lets us tighten that stop immediately. And so we'll go over here, we'll put that on down there. And moves on down, closes below. Now, of course, this deviation level down here. And one of the things I always tell people about is when you get to move down to 1 deviation, you may want to consider tightening your stop. to a subsequent bar. You can do it however you want to. But, I mean, we don't expect it to move further than a deviation or actually finish further than a deviation on any given day. Does that happen? Yeah. So maybe about less than 1 out of 3 times. Okay? So if we're not expecting that to happen, then we don't, and we're up a massive profit. I mean, this is, 1545, and we're up, 1534. That's 11 ticks. Okay? This isn't based on just P&L. All right? I mean, statistically, it has moved extremely far. And the probabilities of it continuing to move are very low. And so it moves on down. And what's a method? How could you do this without, just totally, randomly doing things? Well, you could go in, you could tighten up. You could look at 5-minute bars, things like that, sort of, trying to get a place to tighten your stop. So if you didn't want to tighten it too much, but want to give it a little bit of room, you could have tightened it over here, like on 5-minute bars, and go, okay, well, what if I close it right here because I close above, and then I go back and I close below. And then you could, say, tighten your stop right here, and which would have been a good place. I mean, it's just oscillating right here, right now, and that's at the 1 deviation level anyway. So you're basically still closing at the deviation because it never closed right here below the 1.5. And now, if you want that money, you could always take it off the table. The thing is, you are going to get those days, right? Like USD yen that moves. I mean, they're rare, but moves 5 deviations that you could leave it on the table. So if you're one day, really have the room to go for it, then there's a couple ways to do it. One of them is this method right here. We go down to a smaller bar size. Or the other one that I think is actually pretty simple is when it breaks that deviation, just tighten your stop to, the deviation. And so if it keeps going, well, hey, it shouldn't be coming back anyway. But if it doesn't, then it comes back, you're out, boom, you capture deviation. In this case, it would work the same either way, whether you're on 5-minute bars or 10-minute bars. As you notice, it closed above and then closed below. We would have put it on the exact same bar and eventually been stopped right over here. You actually could have tightened it a little bit further, I guess, because you actually got to close below, another close above, so you got to tighten it right there, and it's pretty much about the same price. It closed below, and then closed back above, and then closed back below, so you could have tightened it right there, and so it would have been pretty close to just following the standard method as it would be at putting at 1 deviation. It's really hard to close it though, tighten it if you're down at 1.5 and it doesn't close below it. So there's always that, now you also, if you tier into multiple contracts, you could tier out of some. So you could say, you know what, I got, 10 contracts on, I'm going to go ahead and take off 2, immediately at 1. And I'm going to take off 2 at 1.5. And, I'm going to have trailing stops on the rest. So there's a lot of different ways that you can actually, when you do multiple contracts, you can start tiering out of the trade if you want to. If you're, like, I don't want to give all this back, well, then I could, maybe take off half, at 1 or half at 1.5, that type thing. So there's just, again, a lot of different ways for you to take advantage of it. And that's one of them. So let's go ahead and let's check out a couple of the other indices. We got some big moves on them right here, but let's go ahead and check out NASDAQ right now. And we can see the move down, 1 deviation right here. And then it moved on down, 1 deviation right here. And let's see here. Okay, we've got close above, close below. Got another move. So this one we actually got to move below our 1 deviation, 1.5. And then it popped right on back up. And now it's just been flat ever since. So that's a trade that you're happy with. you had a trend. It wasn't like this one just came out of nowhere, right? You had a trend, things moving on down. And now the NASDAQ is sort of going into chop right now, and it might do that for the rest of the day. I got a few hours left, not even quite 3 hours left in the trading day, and it made us chop around right here. And looking on over, let's check out the Russell. What's going on in it? What could we find? Well, you got a massive, wow, look at that reversal on that one. Well, it obviously it moved on down for us, and we got a nice short down right there. So that's our first stop. And then it closes back above, moves on back down. So it does give us a chance to go ahead and tighten the stop again. Close above, doesn't close back down. And also, if you're watching the charts, you would have definitely saw a divergence on that, on the RSI right there, and it starts flipping back the other way. So how are you going to protect your stops on the way back up? Well, on the way back up over here, looking at this, well, bar closes above it. There we go. There is our stop. Okay? This bar closes above it, so you may have taken off profits on that right there, but there's nothing that says you can't get back in. So it comes on back down, hits the deviation level, you hop back in right on this, on the breakout of the high, okay? So right after it touched this deviation, so basically pulled back. This is basically a swing trade style, okay? So you're getting basically that bounce between the two levels. It goes in, it closes back above, and I mean, it's really, sort of pretty volatile right here. And so that would have been, well, you couldn't move up the stop yet because it's not above your entry. So it could be break even. I guess you could have got stopped out at break even at best right there. And then right here, it breaks out above this level. So there's another one, but now you're waiting again for it to move up to a stop. So, basically had one or two maybe good trades out of that reversal back up there, unless you just did pure RSI divergence where you could have caught a nice run right down here at the bottom. And so I can show you, let's see if I don't usually look for it on 10-minute charts, but it may show up on 10-minute charts. Let's look at it real quick. And I usually use a different type of bar. I use a diagnostic bar, so it's sort of a style of Renko. So right here, not really seeing the best RSI divergence on the 10 minutes. We could break it on down to 5, see if it shows up a little bit better for us. Try to keep it where it's not too confusing over here. And we do get, let's see, lower high, higher high. Not really getting a divergence set up on that. Let's flip over to ES, see if that makes it a little better. Because I know I'm staring at an ES divergence right now. And, okay, there we go. So we get a little bit of RSI divergence going on where we're getting basically lower lows and higher highs. And with the divergences, that helps out a ton. And one example, right here. And let's see if I can find that one. But I'll pull it up on the chart. We'll do it either on this session or on the next session. We'll just go into detail in the divergences and how they work. They're more advanced to trade. Some people love to trade them. Some people hate to trade them. So it really just depends upon your trading style. And, are you a contrarian? Do you love to go the other way on the market? Or do you like to just go in and limit your profits and everything else? I usually don't look for a major divergence on a market until it's past a deviation level. So at that point, that's usually my time frame when I want to look at a major divergence. So because without that, I'm just sort of, I guess you could say pushing my luck. So, and, contrarian trades work really great till they don't, and then it just sort of blows up on you. So, but, I mean, the divergence is probably, in my opinion, the best, and I think in most traders' opinions, the best. And if you can get a double or triple divergence, whether you use stochastic, MACD, RSI, momentum, whichever divergence you like to use, whatever method it is that you like to use divergences on, then it's a pretty cool way to trade. So I like to do basically the breakouts in the bars, tighten my stops, and then again look for the divergences when they break through certain levels. And let's see here, I might even have a template I can load that might work for the divergences. Let's see here. Here we go. Pull these up. There we go. So yeah, so I got some divergences going on right over here, but really only one of them pointing long, and that's that one right there. And let's back on, like I said, the 5-minute bars. I'm not a minute bar person. To me, it doesn't make a lot of sense to use minute bars. So, but, if you like them, they work for you, then that's awesome. So right here, okay, so we do get a divergence right there. See, we're getting lower lows, okay? And then we're getting higher highs on, let's see, RSI. I'm getting a TSI. I'm also getting a momentum divergence. So I got 3 divergences happening at once. That's a pretty good clue that I might want to start going long. I'm also down at 1.5 deviations. I just hit 1.5 deviations when 2 of them fire off, and then get a third one that fires off right over here when it comes back, sort of as a bounce back off that. That's the point where you could buy and you could fade the market. So that's one method to use a divergence. But again, I really trust them a lot more once they passed 1 deviation. So inside of this, I mean, you can get a divergence, and sometimes it takes 2 or 3 of them. And this right here actually gave me a double divergence, which I love double and triple divergences. So have a lot more trust and faith in a double or triple divergence. But and then I guess now that we got this up, we can go over and we can look at some of the other indices real quick. Check that out. See on the Russell, yeah, so the Russell, we got the exact same thing. We got that divergence right there. It's so slight, it was hard to even see without just majorly zooming in on the chart. And then hopping on over at the NASDAQ, so we can see right here. Pull up these charts, and look at that. Yeah, there we go. So we got that RSI divergence coming up. We got the price moving on down. And that gives us, several divergences all at once. And so we got the hidden divergences, which is basically divergences in your favor, and then we got the actual divergence taking place. And when you get, like I said, 2 or 3 of those at the same time, and you passed a deviation almost at 1.5 deviations right down here, almost actually at 2 deviations down here, because you're past the 1 and you're past the 1.5, and you got a double, so 1, 2, then that's the one I'm going to be more interested in. It's very tempting to always go in when there's a single divergence And that can easily lead to you being a contrarian way too early. Okay? And then right over here, we go in and we'll check out, what else do we got on that YL? So let's check out the Dow and see where we are on that one. Just sort of look at the same thing across the board. But yeah, there's 1, 2, 3. So we got a triple, almost a quadruple divergence. So, and so that, I mean, that's a sweet divergence right there. So 1, 2, 3, 4, that's pretty unheard of. And basically it's what I'm doing is I'm stringing all the different divergences together. And I got a triple right there on RSI. So actually I got let's see, 1, 2, yeah, so 3 divergences on RSI. And at the same time, when I got that third divergence on RSI, I also got one on double stochastic, and I got one on CCI as well. So that's where you want to fade the market. And again, are we below 1? Yes, we're at 1.5 deviations. So putting all those divergences together when you're above or below the deviations gives you a very strong edge. Trying to use them when there's only one divergence, or when versus having like a double or triple divergence on the same indicator, or having multiple divergences line up, to me is just it's trying to be too contrarian. And so many traders lose just because they're always trying to find that turning point in the market. And to me, it's easier to just go with the market. But once the market has exceeded its expansion point, it's went past that 1 or -1 deviation, then that's when I'm going to hop in and go, okay, I want to go ahead and see how I can possibly take advantage of this. And, you know, now it's time for me to look at divergences. And the stronger they are, you know, the better. And it can be sort of scary to go in and, you know, take a divergence, because you are fading the market. You're going the wrong way. And but if you do it at the right time, you know, such as like right here, we got all these lining up. I mean, like I said, quadruple right there, a triple in RSI. And then we got, you know, 3 or 4 different indicators all giving divergences at once. So that's very, very strong. And it's, you know, it's one of the best indicators that exist. So we tie all those pieces together, get a great, sweet trade. Thing starts running on back up, and you're able to capture, you know, a good move. So almost, you know, about 0.7 deviations move right now. So you're at -1.5, and it's almost up to the 0.7, which would, you know, at this point easily be the target. And also the pattern starts to flip, and you can take advantage of that as well. So you don't have to be a divergence master, but if you're going to fade the market, if you're somebody who's a contrarian, you have to be looking at divergences. That's the only way you're going to get an edge on, and in my experience, I guess you also have Fibonacci. So you use like a Gartley pattern, Tiger-Gartley. So Tiger-Gartley, you know, Gartley patterns and divergences, especially if you can line the two up together, it's even sweeter. But depending upon exactly how you're doing the trade, how your setup is, and what bar types you're using and everything else. But those are probably the only 2 consistent, effective methods I've seen that have really called it. Because if you just use a pure fib level or pivot level by itself, well, I mean, we all know that becomes like a 50-50. I'm trying to get my probabilities up. So there's probabilities, not possibilities. So possibilities, you know, they're possible, but anything's possible. What's probable? What's likely? And that's where I want to put my focus on my trades, is the probabilities. And so let's see here. Let's go back and check out where a few of the other markets are on the deviation levels over here, and we'll wrap those up right when we get back from this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. And what we're doing is we're doing a quick wrap-up. Let's go ahead and also make sure we get you caught up and ready to go for this coming week. So what is coming out that you need to be aware of? Daylight savings time is shifting over on the Australian side of the world there. So Australia and New Zealand are shifting their daylight savings time. That's going to move all their banks and everything else, all their news announcements. All that's going to be updating. Japan's going to have current account come out, usually not the biggest mover. Who knows? With Japan lately, everything seems to be making it move. So you might want to check that one out on Sunday night at 7:50. But trade really light. It's usually just not a big news announcement. The only reason I would even consider looking at it is just because of, well, the yen's just gone nuts. So looking on over April 8th there, what do we got on Monday? So we got New Zealand business confidence report at 7 o'clock. If you're a New Zealand dollar trader, I don't really trade New Zealand dollar that much. And then 7:15, Bernanke is going to grace the markets and have another little speech. He'll be speaking at the Federal Reserve Bank of Atlanta Financial Markets Conference about maintaining financial stability and holding a tiger by the tail. So that's actually the name of the title of the conference, Maintaining Financial Stability, Holding a Tiger by the Tail in Stone Mountain. So, anyways, that'll be happening 7:15 Monday night, so be aware of that and any volatility that may cause. And then China can have its CPI number come out at 9:30 Monday night. So really no major news tradable events, direct tradable events happening. On Monday, we roll on over to Tuesday. We're going to have the CPI, so come out on the Swiss franc. That's a tradable event. Manufacturing production coming out of the pound at 4:30. Building permits, which actually can be a great report on the CAD. And housing starts, both of those happening at once, can be a great USD CAD report right there. That'll be 8:15. Housing starts 8:30 is the big report. That's the building permits, 8:30 a.m. in the morning. So that's one to check out. So sort of a lighter week so far. And looking in, we got China trade balance report on Wednesday. Tentative, who knows? And again, not really a tradable event. Then we're going to have employment change and unemployment rate on Aussie dollar coming on out at 9:30. And let's see here. So they got that one. Let's look on over a little bit later. And we'll see and that has been a decent mover lately on the unemployment claims and unemployment rate. So they're over in Australia. And looking on over Thursday, we're going to have unemployment claims. Of course, that's your gold, USD CAD. There's going to be a CAD report coming out, NHPI. So it's a medium impact report, but with unemployment claims, that could make it a decent mover. Just make sure it's a good risk reward if you're straddling it. And then we'll have a couple moderate reports come out, but a really light week. And then Friday, we're going to wrap up. That's going to be the big reports coming out for the week, really, are all coming out on Friday. It's going to be your core retail sales, your PPI, your retail sales right here in the U.S. Bernanke is going to have another speech on Friday afternoon, speaking before the Resilience and Rebuilding for Low-Income Communities Conference. So basically a conference sponsored by the Federal Reserve System, Community Affairs Officers in Washington, D.C. But so he'll have a little speech, and again, always looking for clues and things that he might say. But, not a major one that I'd be focusing on. And, again, it's Friday afternoon on top of that when that speech comes out. So on the core retail sales, probably going to be looking at USD yen, especially lately. Then this going on, and historically even. Checking it out, USD yen has pretty much outpaced almost every other currency pair just about every time as far as volatility on core retail sales. PPI, seeing the exact same thing, having a higher volatility movement based on that report. So if we look over there, yep, same. Like I said, same thing right there. It's pretty consistent. Most of the pairs had a moderate impact, almost equal. The yen basically won out on the PPI, which comes out at the exact same time as core retail sales. And retail sales, we're going to see the exact same results. So really USD yen, maybe USD CAD if there's a good risk reward set up. But tomorrow is a light news week. And we'll also have the consumer sentiment that you can check out. So just trade the charts, baby. That's the best way to trade anyway. Y'all have a great day, a great weekend, and I will see you next week. Stay tuned. We have another great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.